All right, it's the 7th of March. It's Friday. We've got about 30 minutes to the NY Open. We'll get to the charts in a second. Okay. Okay, before we proceed, so sound good? Yeah, sound is good. Mm. Yeah, just a second. Okay. All right. Let's start with the calendar as usual. So we've got NFP today. That's almost in about an hour, about 58 minutes from now. So there's plenty of time to do our prep work. We have almost an hour to do the prep work and wait. I'm not going to be opening any trades um, before NFP. NFP is at 8:30 a.m. EST. Um, NY Open is at obviously 8 a.m. EST. So 30 minutes after NY Open is NFP. So we're going to wait for NFP. Right? It's a big news event. It's a high volatile news event. Uh, Possibly and hopefully high volume news event as well. So we're going to wait for news before we take any trades or look at any setups, look at any potential setups. So we're going to do an analysis and basically see where price could go, where it could grab liquidity, so on and so forth. Okay. All right, let's take a look at the daily. Let's go up a time frame and look at the weekly. We've got a lot of time for analysis, so I'm going to take my time today. So the weekly has been bullish, very bullish. Okay, we have covered about 750 pips already on the weekly candle. Um, if price continues higher, if this candle can be similar to this candle, right? We could have a 1,000 pip candle, a weekly candle, right? Very likely, or even more, if we continue bullish. If we push down and continue bearish, well, we might have to retrace all of these buys to come down. So let's not let's just take a look at what's happening on the high time frame for now. So price on the weekly, we grab liquidity from 2834, pushed up, and then the daily candle opened. Then on Monday, that was on the second, I believe. Monday was the second. On the third Monday, and we just pushed up with no bottom wick on the daily or the weekly, right? So we've been pushing up because of what's been happening, a lot of geopolitical news, the news about the tariffs. There's a lot of stuff going on. So price gold is seen as a safe haven. So gold prices have been pushing up, right? Now, if we continue, then we're going to easily get to 2950 very easily without any difficulty. 2950 is very easy. That's about almost 300 pips on where price is sitting right now, and that's pretty easy to do, right? We should get to 2950 because we've tapped 2929 several times. These are just on the weekly. We've tapped it 3 times on weekly candles, but if you go down to the daily and the 4-hour, it's tapped it a lot more than that, right? So 2950 is very easy to get to. Now, are we going to go further than that, right? Are we heading further? Very possible. If there's a lot of volume, a lot of bullish volume, we could be heading towards 3,000. I've been saying this since the beginning of Jan, the first week of Jan, that's where gold is very likely heading to 3,000. You can watch any of my streams in Jan I've been saying this. The first 30 minutes is always the prep work. So you can watch just the 30 minutes. That's where I do the analysis, high time frame analysis, right? So prices very likely could go to 3,000, right? If there's a lot of volume. Now, price can also go bearish. That's also a possibility, right? On the weekly, we can push up to 2950 and higher, or we can just push back down since there is weekly resistance here already around 29.29. We can push down. That's also possible, very possible, right? So two scenarios on the weekly. On a very broad strokes, that's what we see. That price could head up to 29.50 and higher, or the weekly or this weekly candle can push down and flip bearish, right? Um, it's unlikely, but it could happen. Okay, let's go to the daily, and the lower time, the lower we go, the more information we have uh, on the chart, right? So price has been hovering the last 3 days. Price has been hovering at this daily supply zone, right? There is a drop, a base, and a drop. Price has been hovering there. We touched that 3 days ago. This was on the 4th, so this was on Tuesday. Yeah, on Tuesday we touched it. Then Wednesday, Thursday, we've stayed there, right, at that supply zone. We've pushed down on Tuesday, but then we pushed back up again. Again, we pushed back yesterday on Thursday, and we pushed back up again, right? So it seems like this supply zone has held price for 3 days, but I don't think it's going to hold price any longer because the liquidity on that zone has been consumed, has been consumed because price has been hitting that area many times. So when you go down to the 4-hour time frame, you'll see the zone and you'll see how many times price has touched that area, right? So the liquidity in that area is consumed. So if you break these highs, if you break above the daily high, which is 29.2650, we should push up. We should be pushing up. If you break above this high, we should continue higher, another 240, 250 pips, right? Once you break this high, at least that's on daily, because price is seems to be rejecting 2900. We rejected it on Wednesday and Thursday, and we seem to be rejecting price again today to push up. Okay, so price can push up, and if we do break the daily high, the previous day's high, we could continue higher. Okay, that's on the daily. Now there is supply here a little further up. There is daily supply around here, but there is also clean space above this on the daily time frame above 29.29. There is clean space for price to head to 2950. That's a 230, 240 pip move up. And if there is volume, then we're going to go past 2950 because this daily candle has no top wick. We're going to go past it, right? Probably fill that the weekly candle wick and head higher, right? Um, the lower times frames we go, the more information we get, right? So price could, there is no top wick on the daily here, and if price heads here, we're easily heading there. We're heading to that high there. That high, we head to that high means we are filling this weekly candle wick, right? That's what it means. We're going to fill this weekly candle wick and we're going to push up higher. That is if price is heading higher. Okay. Um, okay, let's go to the trading chart and take a look at what has happened. Let's do. I always do a recap. The first, as soon as we start the session, I'll do a recap of of the trade of any trade I took the previous day or any trade ideas that I gave out before the stream ended. So I did take buys, but I closed my trade because price was just ranging around here, and I just closed my trade once I opened some positions here. It was just ranged for a very long time. I didn't have the patience. Maybe I should have waited, but price kept dipping in and going up, dipping back in, going up. I didn't have the patience, and I just closed the trade. I reopened them up here when the candle broke this M15 high, I believe. Yeah, when we broke this M15 high, I reopened the trades, but then again, price ranged a lot on the low time frames, came back down. But I said eventually we're going to go to 2913, 2915, and 2920, and that's exactly what price did. Price did eventually get to those three TP levels. If you watch the last 5 minutes of any stream, that's when I give out trade ideas, right? So if you watch the last 5 to 7 minutes of yesterday's stream, you'd see that that's what I said. Price is going to go up, and it's going to go up before it goes down, because I said the session trend for the session is bearish. So the right trade is sells, but for sells to work, price needs to go up to grab liquidity. That was the reason for this trade, right? And if you watch why I said that the buys will work, because price had tapped 2950, 2900, and rejected, and it was pushing up, right, on the 15-minute, and we also formed 30-minute support here from 2950, from 2900. So I said we were going to push up and then grab liquidity, probably from a liquidity area, ideally a liquidity candle, and then go down. The sells were the trade of the day yesterday, but the buys did work out and the sells also worked out, right? So I said, if you're taking sells, if you listen to the last 3-4 minutes of the stream, I said wait for sells, wait for 30-minute resistance to form a tradable 30-minute candle, and that is that tradable 30-minute candle. This is a doji. You got to wait for a 30-minute, a tradable 30-minute candle to form. This is a resistance, but it's not a tradable candle, so you can't trade off this candle. This is a resistance and also a tradable candle. So you could have taken the pullback. The safer stop loss is always above the liquidity candle. So anywhere above that. And where would price come back to? The closest liquidity area. The closest liquidity area on the chart is 2900, right? And that's exactly where price dropped to. That was a almost 200 pip drop. Okay. So the buys and sells both worked out as expected yesterday. Okay, so let's get rid of all of these and start the process again so that we are ready for NFP today. So again, the way the streams are, the way the stream is set up, right? Or the way the stream is structured is the first 30-35 minutes is the prep work or the analysis, and then basically I explain what I'm waiting to see on the chart to take a trade. And if I do get take a trade, I explain beforehand why I'm taking the trade and where price is going to go to, where the stop loss is going to be, all of that. And if price goes in drawdown, I also explain how I'm going to manage risk, and it's all done live, right? Then in the last 10 minutes of the stream usually lasts for about an hour and a half to 2 hours, anything between 1.5 hours to 2 hours. So basically I end the stream at the NYSE open, around the NYSE open. So then I do give out, if I do see a possible setup for the next couple of hours after NYSE open, I do give out those setups. I say exactly where the stop loss should be, where the TP level should be, and where the entries should be, right? And then we come back the next day and we see if those played out exactly the way I said it did, right? So if you're on the streams, there's an easy way to make money. Okay, so we've just been ranging. It's really ugly since the last 3 days. So that's, yeah, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, it's more 19 4-hour candles. Yeah, that's 3 days, right? Yeah, over 3 days. We've been ranging for over 3 days in this block between 29.29 and 2900, right? So even less, yeah. In about a 240, 250 pip range, we've just been bouncing up and down, right? That's all that's been happening the last 3 days. Where price is waiting for a breakout. So it's very likely, just by looking at what's happened in the last 3 days, how price has been ranging for the last almost 75 hours. Yeah, has been ranging for the last 75 hours, that it's very likely that we're going to have a lot of volume for NFP, a big breakout, right? Either above or below. Okay, so when we go down to the low time frames, we're going to have an idea of where is it going to be up or down. With the more information we see on the chart, when we go down the time frames, we'll be able to take a calculated guess, or if price is heading down or heading up, and where exactly it's heading to, where it's heading, where it's going to start, and where it's going to end. Okay. Um, all right. Okay, let's get rid of this liquidity candle we drew yesterday. That one's still valid because price hasn't tapped it yet. Now we've got a 4-hour zone here. Price has come deep into it, so yeah, that would be correct, right? Let's have a look at it on the 1 hour. Sorry, just a second. Yeah. Um, yeah, I'm gonna have it there. I'm gonna bring it up here. Okay. So that's the high. That was the high where price was. That was the zone. Originally had it at a rally, 1, 2, 3, 4, 5, 6 basin candles. Now, so we haven't broken the high, so I'm going to still keep that there. Actually extend it here the way it was. But now I can push it up to this 1 hour supply. We have a rally, a base, and a drop. Okay, but we haven't broken the zone yet. So the zone is there, but we have narrowed the zone down, because it was a broad zone. It was about 175 pip zone, and now we've narrowed it down to about 80 pips. Okay, 80, 82, 83 pips. Okay, that's fine. Um, this high is 29.96, 167. Okay. Okay, so that's a supply. Okay, that's still 4-hour supply because price hasn't gone through it yet. And it's still a high liquidity zone because, yeah, we haven't crossed the 50% mark yet. Or have we? 178, 78. Oh yeah, we have. We have. So I'm going to take away that label from there. Okay, we have crossed the, yeah, 177. Yeah, we've crossed the 50% mark. So, but it's still for our supply because price hasn't gone through it yet. I'm going to extend this liquidity candle to the right. We had drawn this yesterday. Yeah, let's get rid of it for now. Just don't want to cause any confusion. Okay, so that's supply. Let's take a look at demand. Um, we have a zone here. Okay, they have a zone here. Let's take a look at it on the 1 hour. Yeah, that's about right. Yeah, let's put the numbers there. 137,684. 137,684. Okay, and that's 4-hour demand. So we have 4-hour supply here, 4-hour demand here. And then below that, there is a drop and a rally here. Um, as I say, if it looks like supply, then there is supply there. I mean, if it looks like demand, there is demand there. Because there's a drop and a rally, there has to be a base there. So we're going to go down the lower time frame. Yeah, there you go. That's the base. There's a drop, a base, and a rally. The reason this is a base is because this has a more collective wick than body. Okay, but we're going to bring this down so we don't overlap it. And this low is 102.684. Okay, great. Now, then the rest is, we're going to just extend this to right, but I'm going to bring this down so it doesn't overlap. This low is 102.2. Okay, so we're gonna, that covers about 400 pip area, but we're going to extend this because it's NFP, right? We're going to extend these zones because price can come further down. And the purpose of these zones are it provides a roadmap of where price could go. Because as I always say, once we break through a liquidity candle, if there's not enough liquidity for price to go in the opposite direction, once it gets to that candle, it's going to go to the next liquidity candle until it finds enough liquidity. So these were drawn at the beginning of the week. I'm just extending them to the right. That's all I'm doing. I'm not going to redraw them. Okay, so this is also a 4-hour zone. It's visible on the 4-hour, a drop and a rally, but the base is on a 1 now. Okay, so that's fine. Okay, so we've got our demand zone marked out. We've got our supply zones. We're going to just extend this to the right as well. Okay. Two liquidity candles there. If price is heading higher, it's going to go through those liquidity candles here. I've said this many times before. When you have two liquidity candles just next to each other, just on touching each other like this, that means price has tapped them on the way down, and that's exactly what has happened. Price has tapped this liquidity candle right here. You can see the tap there and then push down. So if price is going to push up, then we're going to go through both of them. We're heading to 29.50 because of the volume that we'll have with NFP, right? Okay, let's just clean up the chart a bit. Okay, now next step, we've got Yeah, we've covered a fair bit of distance, about 700 pips to the downside and about 368 pips to the upside. That's fine because anyway we're at all-time highs. Once we break 2950, we're at all-time highs and price could just push through after that. Okay, so we have three new zones now. We're going to take a look at these three new zones. This one. No, sorry, we have two new zones. This is yesterday's zone. Prices come deep into it. We have two new zones here. We're going to take a look at these and see if they are high liquidity zones or not. Let's go down to the 1 hour time frame. Yeah, so price, this supply, there's a this demand here, this 4 hour demand zone has broken above this high. That supply rally basing candles and the drop, we've broken above that, so this is a high liquidity zone. Let's put a label there. Okay, and then this zone here, there is a drop and a base. Prices, it's an 82 pip zone. Prices come, yeah, about 1/4 of the way, a little over 1/4 of the way into it, and this has taken out. One second. So I'll go down to the. We've broken this high. No. Let's go down to the 30-minute time frame for this. Yeah, this is not a high liquidity zone. It's not taken out any supply on the way up. No, this is not, but this one is. This is not a high liquidity demand zone. It's not taken out any supply to the left. This move up didn't take out this supply. Yeah, this high didn't break this. Push down, this is the one that broke this. So this is a high liquidity zone, this one is not. Okay, done. We still have about 31 minutes, 32 minutes for news. It's plenty of time. Right, now, next step. So this is the steps that I follow. We've identified supply demand zones. We've identified high liquidity zones in those supply demand zones. And now we're going to look for a high liquidity candle in the newly found zones, right? So there we have two zones here. So basically a high liquidity candle is the largest candle of that direction, of that demand. So if it's demand, then I'm looking for the largest bullish candle there. Okay, so let's start with the 1 hour. That's a 79 pip candle. That is 86 pips, so this is larger. Also, there's a wick there. So mark that. I'm also going to mark the wick for now. Okay, let's go to the 30-minute time frame. It's still this candle right here on the 30-minute. 86 pip candle. Let's get rid of this for now. That's 52. Let's go to the 15-minute. It's this candle for sure. It's this candle for sure. 15-minute. Okay. Let's go to the 5-minute. Yeah, it's that candle. So let's put the numbers there. 1008 156. Okay, that's a liquidity candle there, right? That's the candle that can push price back up. Okay, let's go to the zone below. Here. Just save this. go to the 30 minute. There's nothing. 30 minute is this candle right here, 78 pip candle. Let's go to the 15 minute. There's nothing here. Let's check the 5 minute. 34, 24, 28. Maybe this, maybe. Don't think it has any volume. We'll mark it out on the 5 minute. That's the only candle. It's fine. 437,102. Okay. So if price breaks this low, we have 2,900. That's the next liquidity area. And then below that is this. Another 50, 60 pips below is this one here. But I don't think this has liquidity. We're going to come further down here. If that liquidity is not enough, this liquidity candle, if there is not enough liquidity in this candle in this zone to push price up, then it's going to come to 2,900. If that's not enough, it's going to come probably here. Yeah, about 89. I don't think there's any liquidity in that. I've just marked it out, but I don't believe there's any liquidity there. Let's just change it so we don't overlap it. Slow is 102. Yeah, that's better. Okay, that's it. We'll take a look at supply also, because we have this zone here price has been ranging at, and it's not a high liquidity zone, but it still can push price down because there's weekly resistance at 29.29. Okay, so let's take a look at that area also for a high liquidity candle. Again, now here I'm looking for the largest bearish candle. There is this wick, that's a liquidity wick. Let's mark that wick out. Let's go down to the 30 minute. $72 pips. Yeah, that's the largest candle right there. Yeah, that's the one. If you go to the 15 minute, yeah, this is the one. That's the one right there. Perfect. 912. 281. Yeah, and you can see how price has tapped it. So it's consuming the liquidity in that, but how far has price come into it? That's a 62 pip candle. Yeah, we've crossed the 50% mark. So if you're pushing up, we're going to go right through this, and if we go right through this, we're going to go right through these two also. We're going to go through them also, because they are. I've said this several times this week. Price, they are together. I'll show you on the 30 minute. 15 minute. In fact, these candles, these liquidity candles are together. Price has tapped them. That's on the 5 minute, and that one is on the on the 15 minute. There's a 5 minute liquidity candle here and a 15 minute one, and that's been tapped. Price has gone through them, right? It's pushed down, gone through them, created one more. The other one got tapped on the way down, and then it's got tapped here again, and it's got tapped here. Yeah, so it's got tapped several times. We're going to, once we if price is bullish, we're going to go right through all of these, and then we're heading there. So that is, yeah, about a 300 pip move. Like I said at the beginning, when we looked at the daily chart, that's what I said. About a 300 pip move to 2950, and to the top of this candle. That's where you want to probably exit, because that'll be the weekly wick fill. Okay. All right. We've got a lot of time. We have another 23 minutes. What I'm going to do is, okay, so that's the analysis. Let me just zoom in here. Okay. Just move this down so you can see it. And, okay, yeah. I'll be back in a couple of minutes, and then we're going to look at what price has done in the Asian session and the London session. And that might give us an idea what could possibly happen in the NY session. Now, keep in mind, today is NFP, right? So there are two news events every month that has very high volume, that could possibly have, that are, sorry, let me rephrase that. There are two news events for the month that are extremely volatile and that could possibly have a lot of volume. That's NFP and CPI. Just on those two news events, on those 2 days, I don't wait for 30-minute support or resistance to be created, because your 30-minute candle might be a 200 pip candle, right? So you have to look at a low just for those two news events, right? So for those two news, just for those two news events, I look at the 5-minute time frame. So I wait for news, see if price pushes up into any one of these liquidity areas, right? These are the liquidity areas. These are the 5 areas that I've always talk about, that I identify on a price chart that could have liquidity. I wait for price to get into one of those. So here we have a liquidity candle, we have weekly support, we have weekly a weekly SR level, right? Weekly SR, high liquidity candles, weekly SR, BRN, which are psychological round numbers or big round numbers. That's this one right here. So wait for price. We're going to wait for price to get. I'm going to wait for price to get into one of these, and then I'm going to wait for the 5-minute time frame to create support or resistance on the 5-minute. And on the 5-minute, I might take a trade. Right? It's either the 5-minute or the 15-minute. It'll not be on the 30-minute, because the whole idea is we got to be prepared for a lot of volume. So the 30-minute will be too late. So it's most likely going to be on the 5-minute. We're going to look at the 5-minute time frame, wait for support or resistance to be created. See which, it all depends on where the 5-minute candle taps. If it taps a liquidity candle or a liquidity level and then rejects, then you would know your direction, right? So that is why I said at the beginning, we do our analysis. The reason we did this is to have a broader idea of what could happen on the high time frame, right? So we looked at the weekly. So let me just summarize. We said price could push up. This is a 700 pip candle so far. We could easily it could easily be 1,000 or 1,100 pip candle, a weekly candle, which means price would have to push up for that, right? Back up here, right? For it to be 1,000 pip candle, you'd have to push up here to 2950 or past 2950. Because, and we could be bullish because we've had a lot of geopolitical news, so it could drive gold prices higher, right, with volume. Now, it could also go bearish, right? And if it goes bearish, then we might not have a big move. We might just have a pullback instead of a big move where this candle flips bearish and pushes down. Can happen. It can always happen, but it might be a little, it might be unlikely. We might just continue to push up, okay? Then on the daily, I said that price has tapped this daily supply zone several times. So the volume in that area is gone. And when we do look at our zone, we can see how I just said, now price can easily push. We've crossed the 50% mark here. These two liquidity candles also have been tapped several times. So we can push right threw all of that up, right? So it makes sense. What we see on the weekly and the daily now is beginning to make sense. And I also said on the daily, we are rejecting 2900 and we're pushing up, right? So we could continue to push up. But keep in mind, we can always flip. The daily can flip and we can come down because there is no bottom wick on the daily or the weekly. On the weekly candle has no bottom wick, and the daily candle here also has no bottom wick. So we can flip bearish and come down all the way back to 2834. That's possible too, right? That would be about 800 pip move. Unlikely, but can happen it can happen during an NFP. If there is a day that it can happen, that's on NFP or CPI. Those are the days that it can happen. Okay, so now we have our zones. This is like a roadmap. So we know if one zone breaks, where is it going to go next? If this breaks, it's going here. If this breaks, it's going here. Once this high breaks, this liquidity candle high breaks at 2940, we're heading straight to 2950. That's another 100 pip move up. Okay. Right. So I'll be back in about 2 or 3 minutes, and we'll have a look at what price has done during the Asian and London sessions. All right. Okay, let's go to the 15-minute time frame. Okay, so the market opened here. Yeah, that's the market open. Zoom in a bit. So the market opened at around 2911, right? Around 2911. We opened up, we pushed here, push across these highs. So that'll basically be the Asian low, 684. Let's consider this as the Asian high. Yeah. Okay. Just take one more look at this. 45. Yeah. Okay. Right. So the Asian session prices moved. So the market opened here. Right. This is where market opened right there. That's the market open. Asian session we've moved up 130 pips, and in the London session we've moved up 100 equal amount, about 125, 130, 120 pips, between 130 and 120 pips in each session, right? And the volume has been bullish. Volume has been bullish. The EMAs have crossed. Price is above the EMAs, so the trend, the session trend is bullish. We are bullish right now. Okay. Now, so let's take a look at this. Price, the market opened here. Price tapped the EMAs because we were bearish yesterday. We tapped the EMAs. That was probably the residual volume of the NY session. So when the market opened, it pushed down heavy, 155 pips, and then we grabbed liquidity from 2900 and pushed up. All right, pushed straight up, back to the EMAs, tapped it, pushed down, created the Asian high, pushed down, came back close above the Asian high, closed back below, closed back above, ranged here a bit, and then pushed up, right? Dipped back in, came very close to the EMA. We created the London low there, went straight up, and now it started, the EMAs flipped, and now price is bullish because it's been bullish since here. So we flipped, the EMAs flipped here, they crossed, and we went up and we tapped that liquidity candle, right? You can see how price tapped that liquidity candle right there. It's a perfect tap of that liquidity candle that we marked. It tapped it there, and then it's been ranging since then, right? So now if you look at, that's the London high. We've created resistance. Price has rejected the London high. We should come to the London low. We should come to the London low. We might push down, grab liquidity, either from the liquidity candle or from 2900 just below the liquidity candle, and push straight up again, right? That's possible because we have tapped the liquidity candle in the London session. It does not need to tap it again, although it has in pre-NY. It's tapped it here and it's tapped it again in pre-NY. So it doesn't need to tap it again. The next time it comes there, it's going to break right through. So if it's going to break, if it's the next, if it comes there, that means we're heading bullish. Price is going to push up. That is one scenario. The second scenario is price just tanks straight down. Unlikely, but it can happen. I said uh, anything can happen because it's NFP. On these 2 days, CPI and NFP, on these 2 days, anything can happen. That doesn't mean you throw out your analysis. That doesn't mean you do not do any prep work. Of course you do, because you need to have a roadmap of where price could be heading. So now we have an idea. Okay, price is heading to the liquidity candle. It rejected the London high, created M30 resistance in pre-NY. That's in pre-NY perfect candle, and it's going to push at least down to the London low. That's the minimum, right? So that's a 100 pip drop easily to the London low, and then we're going to see what's going to happen after that. Are we going to because for price to continue down, it has to go up. It has to, if it's going to make a massive move down, if it's going to make a 300, 400 pip or 500 pip move down in NFP, then this volume is not enough, right? Because then, if this volume was enough, here's how you understand it. If this volume was enough, you would have had a 400 or 500 pip move already. But obviously this volume wasn't enough. So if it is going to move down, that is scenario number 2. If price is going to go bearish, then it has to come back up to grab liquidity, either from the liquidity candle or higher from 29.29 or even higher to push down, right? That's the second scenario of price going bearish, going down. If it needs to go 400 pips, or at least 300 pips, come back to 2882, it has to grab liquidity to do that. But price has already grabbed liquidity and it's already pushing down. So it's very likely that scenario 1 plays out, where we push down, grab liquidity either from the liquidity candle or just below that from 2900 or even further down, and then push all the way back up, right? So once we draw these zones, then things become a little more clearer what could possibly happen. Just give me a second. Okay. All right. So yeah, we're already coming down. We're already coming down. That's fine. Don't care about that. Got about 4.5 minutes, just about 5 minutes for news. Okay, let's look at the numbers. What are they expecting? Let's look at what has happened this week. Unemployment claims, they were expecting bad numbers. They were expecting higher unemployment claims, but it was less, right? NFP, they're expecting higher numbers. but we could get bad numbers. We could get bad numbers. And if you get bad numbers, price is going to go up. But for price to go up, it needs to grab liquidity first, just as I mentioned. So there we go. We tapped the London low. We rejected the London high. We formed 30-minute resistance, NY session, and price dropped, tapped the London low, right? That was an expected move. Price dropped 80, 90 pips. Now we are going to wait 3 minutes more for news. Let's see what happens. As I said, again, I'm going to be watching the 5-minute time frame, right? I'm not opening any trades now. I don't do that. NFP is too dangerous to just open a buy or a sell just before news. Some traders do that. Good for them. If it works for them, that's great. But that makes no sense to me. You got to wait for that liquidity grab, right? Sometimes the liquidity, you got to understand why there might be a liquidity grab. If price has to move uh, a huge amount, and that's what we're anticipating, right? Because we've been ranging for 3 days, for 20, for 75 or 76 hours, price has been ranging within a 240 pip range, right? 250, 240, 250 pip range. We've been ranging for the last 75 to 76 hours. Now, if price is going to break the high, break above or break below, that means it's going to make at least a 300 pip move, right? If it has to move down and break those, it's got to move at least 300 pips. If it's going to move up, it's got to go at least 300 pips to break above this range above or break below. At least that's the minimum. It's got to go up at least 300 pips or go down at least 300 pips, right? So for that to happen, for it to make a 300 pip move, at least a minimum of 300 pips, it's got to grab liquidity. It can't do that without liquidity. Price can move 100 pips. We've seen price move 100 pips because if it's already grabbed liquidity in the London session, then it can move 100, 150 pips. But for a 300 pip move or a 350 pip move, it needs to grab liquidity, right? So we're going to wait. We're going to see where it's going to grab liquidity from. Is it going to grab liquidity from up to push down or from down to push up? Okay, news in 40 seconds. Let's go to the 15-minute time frame and see what happens. Again, I'm waiting for the first 5-minute candle to close. This is obviously closing bearish. 30-minute is closing bearish. Let's see. We're pushing up, pushing up. What were the numbers? Bad numbers. Numbers were less than expected, but not much, not a huge change. Not a huge change. Not a huge difference. 4.1, not a massive difference, but it was nevertheless bad numbers. So we're going to wait. This is the newest candle. We're going to wait for the candle to close. Yeah, the candle is about to close, but it's bullish, and we seem like we're pushing up, but tapped here. There wasn't a huge news difference. There wasn't a huge difference. Yeah, nothing yet. This is the news candle. It's closed now, but it's closed back in that range. It's not come to a liquidity area. I'm gonna wait. I'm gonna wait. I'm gonna wait. It looks like we're pushing up, but I'm gonna wait. We came here to this candle. Yeah, we're pushing up, but I'm gonna wait. Yeah, we are pushing up. We are pushing up. But this is not a place that I want to buy from. No, not with a. We are pushing up though. We're gonna push through this, but it's not a place I want to buy from. If this candle had come further down, I would have got in here, not when the candle closed back in just under the liquidity candle, when 10 pips under the liquidity candle supply zone. But we are pushing up. We should be pushing up. We should go through all of this head to the end of this easy. Another 150 pips up easy. But I'm not buying here. What I wanted to see was a, a tap into this and a rejection to go push up, or a tap into this and a rejection to push down, right? On the 5 minute. And maybe this is the tap to push down. Could be. If there's a rejection to push down, I might take sells here. Yeah, I might take a sell here. Yeah, I might take a sell here. Wait for the candle to close. 5 minute candle to close. Yeah, you could take a sell here. Could take a sell there. Yeah. I took a sell because of this 5 minute, the 5 minute candle, bearish candle from the liquidity candle. We rejected the liquidity candle and we closed below. We closed back below the London high once again. We tapped the London high and we rejected. I'll close this trade if we break. If you break above this high, I'm going to close the trade. 636. 636. If you break above 636, I'm going to close the trade because price could easily push straight up to 29.29. I hate drawdown. Seems like we're pushing up. Yeah, it's got to be careful. 26.36 is where I get out. The price rejected. If we break the low here, we should push down. We should push down. Should push down to this liquidity candle at least another 70-80 pips. That'll be a 130 pip trade if you get there. Let's see, I might continue to hold it. If we break here, then I'll continue to hold it. But if you break above, I will close. If you break 29.26.36, I will close. Another minute for the 15-minute candle to close. It should close bullish. Yeah, this one has broken this high. This one has broken this high. Yeah, it's two high breaks. Yeah, once we break this high, I'm closing. 30 pips. 70 on that. Finger on the trigger. 15-minute closed bullish. Right at the London high. We could be pushing up. Let's see. My trade is based off this 5-minute. We rejected. Closed below. Let's see if we can come and break this low. If you can break the low, then we're coming straight down here. If you break this 5-minute low, we're coming down. Straight down. To break this low. 70 pip drop. But it's got to break this low first. It's another 30, 40 pips away. Yeah, there is still waiting for that big push. We're going to break this low. 20 pips, 25 pips away. Created resistance. We shouldn't create support. If we create M30 support here, there's 13 minutes for the candle to close. If we create support, then you got to close your trades. You can't keep them open. So I'm just waiting for this 5 minute to break. But if he, how I'm basically there is no managing risk in this. If price breaks this high, out, out of the trade. This low is 1758. This is the low that we need to break to continue down. Because price has not grabbed liquidity yet to push up. It hasn't. That's what you got to keep in mind. It hasn't yet grabbed liquidity. I said if price is to make a 300 pip move up for NFP, then it has to grab liquidity, and it hasn't grabbed liquidity yet. Right? It hasn't touched the liquidity candle yet. It's touched the EMAs, so that could be enough, but it's not. It might not be enough to move through all of that 300 pips up. Might not be. Might need to come down to grab liquidity again. And that's the reason for this trade. 5 minute, I said I'm going to wait for the 5 minute candle. That's a 5 minute resistance form. Now I'm waiting for this to break, 2017.5 to break. But if it doesn't and price comes back, maybe if a 5 minute candle closes again up here, bullish, I might close the trades. Yeah, there's no top wick on the 15 minutes, so it's likely we're going to come up. We're going to come up. Very likely we're going to come up. There's no top wick here. Yeah, not the kind of volume that we usually see for NFP. It's nothing. We pushed up. We're still in this range. We're still inside this 250 pip range, 260, 250 pip range. You haven't broken to the upside or the down. Let's see if you're going to do that now. Yeah, it's nothing yet. Once we break this, we're good coming down. But we have to break the 5 minute low to push down. There's clean space to the left. We'll come straight down here, 70, 80 pips down once you break this low. 7 minutes more for the 30-minute candle close. If this candle closes bullish, then we form support. It's very likely going to close bullish. And then you got to close your trades. Price can drop, but the possibility of price pushing down now is cut by 50%. I always say this, once you have a 30-minute candle close against you, the possibility of price going in your direction is cut by half. So 6.5, 7 minutes almost. Let's see if we can. Okay, we broke the 5-minute low. We broke the 5-minute low. Now we can break this low. If you break this low, then the candle is going to flip bearish. A 30-minute candle is going to flip bearish. Right? If we broke this low, we should come straight down. It should come straight down. We got another 7 minutes, 6.5 minutes. Yeah, we should come down now. Once you break the low, we're coming down. So it was all based off very clear price action and liquidity. That's what I follow. That's a liquidity candle. Price came, grabbed liquidity. I said we'll wait for the 5-minute time frame. 5-minute tapped, created resistance, but no volume. It's not the kind of volume that I was anticipating. I was anticipating a lot of volume to push to come, but we haven't had that yet. Because during NFP and CPI, your 5-minute candles are like 100 pip or 150 pip candles. So we haven't had that yet. Still have 5-minute candles are 30 pips, 59 pips. That's a news candle. That's about 80, 85. But now the direction, at least we should be pushing down, and the 30-minute candle should flip bearish. It has to flip bearish for me to hold this trade. And I'm expecting price to come here. Yeah, let's put some. Okay, that's the first area. Open 2910. Two nine ten, and then 1247. The next one would be 6. This candle should flip bearish. That looks like if we close like this, that's a liquidity grab. If we close the 30-minute candle close like this, that's a liquidity grab. It's 125 pip wick. That's a liquidity grab to push down. But it has to close like this. It'll be amazing. If you close like this, it's a liquidity. If you close up here, then it's not. So if you close with a huge wick like this, and if the candle flips bearish, that's even better. Then we're coming down. And I would want to then, my final TP will be maybe, yeah, 200 pips here, 2903. 2903. So 2906, 2903. But let's see, I'm going to watch the 5-minute time frame. Once you come here, if you create another bull candle, then we are heading up again. So you got to be careful. You should break this low. Should break the low. Pushing up from the EMAs. Pushing up from the EMAs. Came back to the EMAs, pushing up. We could go back up. We came back to the EMAs. Just got to be careful. This candle is closing bullish. This candle is closing bullish. I think I'm going to close another minute. Yeah, it's going to close bullish. Yeah, closing bullish. It's a liquidity grab. Let's see, I might hold this. Yeah, we broke the low. Should be coming down. Should be coming down. Should have volume now. Now should break this low and continue down. Yeah, we're coming down. Should come to 2906. Yeah, here we go, 2906. I'm going to watch the 5-minute. There we go, 2906. Perfect. I'm going to bring my stops to break even. Oof. I'm going to bring my stops to break even, and I'm going to let this run. I'm going to let this run. 200 pips. Just let's see if you can get there. If you don't, that's fine. I'm going to leave it. It's fine. Let's wait for the 5-minute candle to close. I'm not going to do anything. Yeah, let's see how this candle closes. It's 1 minute, means nothing. Yeah, 5 minute is closing bearish. I think we should have a pullback. That's fine. Um, yeah, if the 15-minute closes below the London low, then we are going to have a pullback and probably going to push down further. It needs to close, but that's fine. I don't care. I've got my stop, my entries right up there, very high. So you can see how the fib was drawn. I entered it actually before the 50-minute candle closed because for one simple reason. I said I'm going to wait for 5-minute support or resistance, and I do that only on CPI and PPI days. I don't do it on any other days, right? So it was done only. I do that only on those 2 days. Yeah, this could be the pullback. One eye candle, what's happening? One eye candle has no top wick. Close bearish, 4 candle is pushing down. Could fill this wick. Yeah. If we close bullish like this, that means we're heading up. We've got 6 minutes more. Let's see if the candle closes, then we've grabbed liquidity. If we close strong bullish, then we're heading up. Then you got to close 15-minute. I'm going to close my trade. So we'll wait for the 15-minute candle to close. 6 minutes, 6.5 minutes more. If it closes strong bullish like this, that's a liquidity grab from the liquidity candle. It's a massive 95 pip wick. Yeah, you got to close your trade then. Then that's a liquidity grab to push up. So we did come to 2906. That was the minimum area. We did come there. 2904, 2905. You can say 2905, 2906. So it did come and tap that. Let's get rid of this. Yeah, I did come and tap that. That's where I took my partial TP. But if the 15-minute candle closes bullish after tapping 2905, closes back up here, bullish, strong bullish, that means we're coming all the way up. And soon as that closes bullish, I'm closing my trade. I'm not going to hold anything. Okay, I'll be back in a few minutes, about 2 or 3 minutes. I still don't have a 5-minute bullish rejection from the liquidity candle. It's a bearish candle. It should break, it should come down. All depends on how this 15-minute candle is going to close. If it closes bullish, then no, then we're rejecting via grab liquidity from the liquidity candle, and we're closing above the London low to push back up. That's when I close everything. I close my remaining position. If we close bearish, then it's fine. Then it's fine. Then leave. I'm going to leave the trade open. Well, this is a massive pullback. 110 pip pullback. It's a lot of volatility in NFP and CPI. That's expected. a minute more, 1 minute more for the candle to close. Let's see. It's honestly not a lot of volume as I anticipated. As you can see, the daily candle is still a doji. It's not a lot of volume. It's been about 45 minutes since news, and there still isn't volume. Now we're getting to NYSE open, so price is kind of beginning to range right now. It's 15 minutes more for NYSE open. I'm going to wait for the next 15-minute candle, and then I'll end the stream. If a 15-minute candle closes bullish, then I'm going to close the trade. Very simple. Because the reason is that's a liquidity grab. It's a big wick. So if we close bullish now, then I'm going to close. Or if the next candle closes a 15-minute bull candle, then I'm going to close as well. See, 10 seconds more. Let's see if we close bullish. It's finger on the trigger. Yeah, they're closing bullish. No, we close bearish. Okay, close bearish. Okay, I'm gonna let it do its thing. Because I got my stop loss at break even. It's a risk-free trade. Yeah. I'll be here for another 15 minutes. Let's see what happens. Yeah, we're going to put, even if we do push down, it's going to be very slow. It's going to take a long time to fill this wick if we do push down. If we close, if price dips down, creates a bottom wick, closes back bullish, then we're going to push up. Because the news was, it wasn't negative, nor was it positive. It was just very close to what was expected, right? So they were expecting bad numbers. They were expecting, they were expecting, what was that, 124? Yeah. They were expecting good numbers. It was better than last time. It was better than last time, right? So they were expecting 159. This is better than last time. So you can't call it bad numbers. Those are actually good numbers. They're better than last month, right? So it's better than last month. It might be bad numbers as per the forecast, just under, but it's better than last month. So it could push down, but that really doesn't matter. It depends on on a day like this when there isn't a clear direction. It depends on where it's grabbing liquidity to push up or push down. That's all that matters. So if this is a liquidity wick, then the 15-minute needs to close bullish to push up. If this is not a liquidity wick, then the next one will continue to push down. But if you break the high, it's okay. I've got my stops at break even. I'm going to leave that. Let's get rid of this. Coming back up. So I'm going to wait for the 15-minute candle to close. But seem like we are pushing up, seem like this is a liquidity grab. It seems like we are pushing up. That's fine. If price comes here, I'll get stopped out at break even. That's absolutely fine. 523417. 417. Eight minutes more. Candle to close. We wait. So there's not going to be a trade setup that I'm going to give because it's a Friday. It's the end of the week. I'm not going to give any trade setup because prices honestly doesn't seem like we've tapped the liquidity candle deep into it. We've tapped this liquidity candle deep into it. There is no clear direction yet. Um, because if price is to come down and you want to take sells, then you got to wait for resistance to form and then come and retest this low. If price is to go up and you want to take buys, you got to wait for support to form and retest the high, right? But It's a Friday. Don't try to force a trade. There really is nothing right now. If the candle closes bullish, I'm closing the trade. Yeah, that means the 30-minute candle is going to close bullish, strong bullish, and we're grabbing liquidity to head higher. That's exactly, I think that's what's happening right now. Yeah, pushing up. Yeah, that seems like that's what this is, a liquidity grab to push up. Yeah. Let's wait for the last 2 minutes and make a decision. And once I close it, that's it. That's the end of the stream, and I'll be back on Monday. Four minutes more. Let's see what happens. Very, very likely going to close bullish. It's best to close this trade. 3.5 minutes more. I'll wait for the last 2 minutes, because once we close bullish, we're going to push up. This is a liquidity grab. We're going to push all the way, because this candle didn't close bearish, it closed bullish. So this one broke the low, grab liquidity. The next one's going to break the high, and we're going up straight through. So there's pointless to hold the trade at break even. Just 2.5 minutes more. Let's see. Yeah, 2 minutes more. We're closing bullish, we're heading higher. 15 minutes, we might grab liquidity from around here and push straight up. But we are just a minute and just under 2 minutes. We are pushing up. Let's wait for the last minute. Yeah, that's it. Close the trade. We are going to push up. Closing above, we're going to push up. Okay, that's it. Yeah, we're closing bullish. We should be pushing up. 20 seconds more. Okay, see you guys on Monday, 7:30 a.m. EST. We are going to continue to push up, probably come down, grab liquidity, and then head all the way up. And we're heading deep into, we're going to go through this liquidity candle, very likely going to go through it. All right, take care, guys. Have a great weekend. See you Monday, 7:30 a.m. EST.